Good morning from Chicago, traders. It's 8:02 a.m. Central Time, 9:02 Eastern on Monday, the 25th of June, 2018. Believe it or not, it's the last week of June. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The performance overnight since the Globex reopened has been to allocate to safety. Risk off is prevalent this morning. We saw it with the start of some heavy selling on the close on Friday. The leader this morning is crude oil. Crude oil approaching $70, trading at the high of $69.16 on the August WTI contract, up 0.63% or 43 cents, followed by the Japanese yen, which is up 21 pips, euro 23 pips. The laggard today is the DAX, down 200 points or 1.58%. So solidly risk off this morning. So we'll talk about that in a minute. That was kind of expected. As far as what's feeding this trade this morning, lots of jitters relating to, well, it was a busy weekend for the Eurozone with the informal EU meeting. They also had Turkish elections, and also some escalating trade tensions, renewed trade tensions with China as reports circulate that the U.S. plan to tighten restrictions on Chinese investments in the U.S. and limit tech exports to China. So that's continuing to be the theme. As far as what's likely to interrupt the auction today, we're getting services PMI prelim at 9:45 Eastern for June at 56.5 expected. We're also getting U.S. PMI manufacturing prelim at 56.1 expected at the same time. Oh, nope, this is not correct. This is old. This calendar did not update. Not good. All right. Yeah, that's old. I was like, I think we already had that. Today, we're getting new home sales at 10. Dallas Fed at 10:30 Eastern, and we have some Treasury auctions. This week we do get consumer confidence, but other than that, not seeing too much durable goods on, what is that, Wednesday, and GDP on Thursday, and then Friday looks pretty light. PC deflator, personal income, and so on. Let's switch gears here and look at what was expected Friday and what we got. Friday, the primary expectation is for a pullback. We were opening on the edge or on the top end of the range of Thursday, in range out of value, and the expectation is for it to drift down and then resume its push higher. Read that as a higher low on the prior session. So expected a retest of 2780, 2780 from back here. That did not happen at all. What happened was scenario 2. Scenario 2, however, didn't even try to take out the prior high. It just went sellers almost immediately. Didn't get to the point of control either. It was kind of stuck in the middle. Friday was definitely a grinder. Here's what we actually saw on a 2-tick Renko. Pretty tough trade, I would say. As I said, it was an open rejection reverse trade. We saw some pretty good selling coming in. The biggest rotation came in early at 7 points, giving us a wide opening swing on Friday. And as we walk through this, day, we notice that, especially on the volume scope or footprint, we noticed that there was a battle. Even though sellers were dominating, there was a battle at every price. So if you keep an eye down here on the delta, remember the delta, in case you're not familiar, measures the aggressor in terms of volume. So a lower delta is a sell aggressor, meaning somebody hitting the bid. For each contract, it subtracts 1. And for each person lifting the offer, an aggressive buyer, somebody who crosses the market and buys at market, it adds 1. And so you can see at this point here, it's a negative. Oh, I need to switch this back. I was doing some research this morning. I need to switch it back to the day. There we go. You see it's negative 6,000. But right off the bat, as prices went down, so did delta. So price and volume and the aggressors were on the same side. And it comes all the way back to the open, yet stays negative. Even though this came back all the way to the open, this stayed firmly negative. And then as we move on, you can see there's better facilitation to the short side. The IB's in, the IB's 1 ticked, the IB has a range extension down. This is a normal day. And every price is fought. Okay, so as we watch this play out, when buyers come in and take it all the way back, you can see that it's just, we did get a small extension, but it's just taken right back down below the mid. We do this again. We get above the mid, back to the open again. But this time, with a retest of the open, we do get a positive delta. And as we continue on, it's just battle, fight until the close. This close had massive selling. It's a pretty big rotation, but we had a negative 30 some odd thousand, 32,000 delta. Serious selling. That's OTF selling on the close, in my opinion. And we bring it right back to the mid. Right there. Again, the mid is the blue line. This blue line, the cyan line, is VWAP. And then we come into the close. We end up closing below the point of control, below mid, below VWAP. But overall, we close above the prior day's point of control. Now, that all sounds kind of bullish, that we couldn't get to the prior day's point of control here. We missed it by a little bit. We stayed to the top side of the profile of value. We never tested value low, and we just held prices. However, if we go and look at how we performed on a weekly basis. So this is a market profile, traditional market profile chart of the ES RTH session on a weekly basis. And what we see here, we see the market one time framing up. So we have a higher low. That means it's one time framing up. But last week, so each day here represents, each color here represents a day. But last week, what we did is we really topped out and we ended the one time framing up with a breach of the weekly low, and we closed below the prior week's range. And what we see here is a market that is showing weakness. And I believe on Friday I discussed the high probability that we would likely end up down here 2732 soon. And that's part of what's driving that. Yeah, last week was too weak. The high was too weak to get back to 2788 and a quarter on volume, approximately 2787.5 on TPOs on the traditional market profile. Couldn't even test the balance or the high volume price of the prior week. That's showing weakness. We've seen sellers pretty aggressive all week. We've seen buyers fighting those sellers, protecting, defending lower prices. but not getting much for their effort. And then we saw them spill over on Friday. And but we finished the week in what looks like a bearish pattern. I want to bring your attention to that. And then beneath us is pretty good balance. You look at these days, and we've got a lot of balance here. Balance means the market's trading, is accepting beat down, well traded prices, and it's just back and forth, back and forth, back and forth, back and forth. And the key price in this balance zone is 27.2375. I believe it's 27.2375 is the key price down here, and it's only about 20 points away before we get there. So the other thing to note is the key price up here was 45.50 was this top right here. That price is a composite low volume node, and we are trading right around it. Right now, we've been stuck here at 27.44 for a while. The overnight point of control is 27.44. So we've built a high volume node right on top of this low volume, previously low volume node. So let's look at the overnight session, what it has done. Anyway, I hope I impressed on you the idea that the market is facilitating trade better to the short side, to sellers. Here's what's happened since the reopen. This is a 24-hour chart. This is Friday's range right here, pretty tight. Okay, so we had this nice run up in Globex on Friday, and then we open. And remember, I told you that this down here, 2760-ish, is really key as we open, and we poked right through, and then ended up holding through most of the session, and then we spilled later in the session. And then this morning we open, and we push right up to about that same area. We open in a gap down, small gap down. We open at 27.57. We close at 59.50, and then sellers come in right away. And then here we have a consolidation, and then we get the continuation trade. We have a long liquidation profile, a B-shaped profile. This is how long liquidation looks like. It is quick to move away and then consolidate. So it's a squeeze, and then it squeezes far enough, however far that needs to be, in order to find the opposing force, in this case buyers. And so once it finds buyers, or shorts who are covering, those are also buyers, to balance out. And it forms this B-shaped profile, and the market likes these prices down here now. And so this is where we end up. We have inventory that's 100% short coming into the overnight session. Also, volume in the overnight session is quite meaningful, 210,000 contracts, 210,000 contracts. So there's a fair amount of participation, in this session. So what does that look like for us? So given that background, given the context and the narrative I just went through, remember, you can go and learn how to order flow scalp and read the DOM and get heat map or whatever other software to read order flow, and you can sit here and talk about how certain market participants are pushing to squeeze for stops and all that stuff. It's all good. Hopefully that approach is working for you. Remember, I cut my teeth as a very high volume scalper, and I'm here to tell you that as a scalper using order flow alone, even though you may be very successful at it, just from my experience and my opinion, that alone does not cut it when it comes to holding on to trades. And what's important, in my opinion, for you as a long-term trader is the narrative. context. What is the market doing? What has it done? Right? What has it done? What is it trying to do? How good of a job is it facilitating that? And then that leads you to the answer, hopefully, of what is it more likely to do next. And that's what these scenarios that I go through every day, that's what they're built on. What is it likely to do next? And I go in the order of what I believe is the most likely scenario, given the narrative. And as I drew on Friday, we have this big kind of inverted cup and handle type of formation. And to watch out below, and that comes from this narrative. And so now we're at 27.45 down here. We are attacking this next area. Oh, and I wanted to show you the composite to show you where that comes from. Here, let's stretch this out. Stretch. So since the beginning of June 4th, we popped up above what is a multiple attempts at this to exceed and push through this 45. And we finally, on June 4th, push through and pop. We take off, and now we're coming back to this 45 area. Okay? We're coming back. We retested at 46 and a quarter back here last week. I believe it was Tuesday. And then popped up all the way back almost to 27.80. And then we're coming back now and attacking it again. And so this area is very key. This is a low volume node right here. And we are just stabilizing around it. Once we break through, if we break through lower, we will find ourselves going all the way down to this thick black line right here, which outlines the MC point of control. The MC point of control price is outlined here at POC. It says right there, POC 27.2375. It's a little bit cut off, but that's the narrative right now. In order to trade a 200 lot, 300 lot, whatever size is on the edge of comfort to you, you have to have a good grasp of the narrative. Believe me on this. It's great to trade what's in the moment, the order flow and so on, but you can do order flow all you want. Order flow is what I use to actually engage with the market, but the narrative is what supports the bias for the order flow that I'm looking for. Okay, so I just want to make sure I put that in perspective. And by the way, order flow, incidentally, let me look at my order flow, happens to be the study hall we're having at Convergent on Thursday for those members. So we'll talk about this a little bit more. What are we looking at for today? We're looking at a gap open. We're looking at key areas down here, right? 27, 23. We're likely to open it in an open auction out of range. We're right in the low volume node, so this is tricky. We might see an open test drive, open rejection reverse type opening today because we're in the low volume node, because we're in this air pocket. So it's hard to tell. I'm going to assume it's an open auction. I'm going to be looking for, oh, that's not the color. It's not the new system that we're working here. Green for scenario 1. I'm going to look for an open auction that attempts to balance out because the inventory is 100% short overnight. Attempts to balance out. I'm looking for it to falter. I'm looking for an impulse down. There's heavy action here. There's a former gap in this area. It's in your flex levels. There's the gap from the 4th of June. And then I'm looking for this to release lower, okay? And I'm looking for about 15 to 18 points. Look for the bounce, and that'll most likely be scenario 1 right there, okay? Scenario 2, which is some people's favorite color, this fuchsia pink or whatever. Scenario 2, open test drive, push through, and if we do get a drive, it is likely to squeeze even harder to balance. So there's a big magnet below us here at 27.23. It's like a tractor beam, and it's likely to push us, suck this down. Now the market, it is a Monday, the market may not be ready for that kind of action. So we'll pull out cyan, which is our third scenario. The third scenario is an open auction, drift, fight this stock zone, fight this next stock zone, fill the gap, impulse up, get back into this naked point of control from Thursday, consolidate, make a breach into the prior range from Friday, and then finish somewhere at the bottom lower end of the range or just outside of it. That's the responsive plan, right? Okay, so those are the three key scenarios. Okay, so we've got this covered. Yeah, it could go up, it could go down, it could go sideways. What are we doing? What we're doing now, once the market opens, what we're doing is we're waiting to see which side owns this, which side is active. Do we actually get sellers? And as soon as the market reverses up, do we get sellers that push it down? So we get responsive buying that's met with selling, just bow, 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 a continuation of that big selling that we saw on Friday. Do we see that? If so, then we're looking at scenario 1 and 2, eliminate 3. If we're looking at scenario 1, does it consolidate in the gap zone? If so, then it's scenario 1 more than scenario 2. If it busts through the gap zone, pulls back to the gap zone, I'm looking short, and now my targets are much farther out. I'm looking for 27, 23. I'm going to hold tight. That's the narrative I'm trading. That's the point of these scenarios, okay? And so I'm looking to see what kind of flow is coming through and which side is winning, and then trade the scenario or the plan that I have for that. It's kind of like a battle plan. We cannot tell where the enemy is going to pop up, but when they do, we know where our troops are. We know where our flank is. We know our weaknesses. We know that we have the Air Force that we can call on. We know we have artillery behind us to pound, things like that. We cannot determine what those fighters are going to do, but we have a plan coming in to cover the scenarios. Trading is no different. It's a battle. One last thing before you run off, and this is getting a little long in the teeth here, I understand that. Please register today for Aaron Fifield's interview tomorrow. This URL is case sensitive. It's also in the description of this video. This is a live interview of the interviewer of traders. Aaron Fifield is the host and trader of Chat with Traders. I think it'll be a very interesting talk tomorrow. Good luck today, and I'll catch you later. Take care.